Hello and welcome to Gotstockz. Today is Monday, March 24th. Today we're going to be talking about the Nasdaq, which is up 426 today. We're going to look at some technical analysis, some volume analysis to help minimize the risk and maximize the profits to build a perfect portfolio. I respect and appreciate your time, so let's get right into it. So the Nasdaq is up 426. This is where we gapped up today. We're going to take a look at some moving averages to see exactly what's going on. Here we are setting up 5 moving averages. The white line is the 10-day, the purple line is the 21-day, the green line is the 50-day, the orange line is the 100-day, the red line is the 200-day, and the teal line is the 300-day moving average. Typically in a bull market, you only need to follow your 10, your 21, and your 50-day moving average. But as you can see, we've been in a complete downdraft, well over 10%. I think it was 13% and change the last time I did the math. But we've had a nice little bounce off the bottom. But let's take a look at the volume to see what's going on. Let's zoom in. Let's go in even a little bit tighter. As you can see, the 300-day moving average, we've hit it several times, and it looks like the market is trying to set a bottom. This was looking like a bear flag, which is a major downdraft in the market. We do not want that. We have this gap here. I would like to see this get filled. We're going to this day. 19,767 is the magical number that we are looking for the entry point for the Nasdaq. Can the market take off from here? It certainly can and probably will. This gap will get filled. We want to be patient. If you're a long-term investor, I've been buying in this area for my long-term portfolio and trading some options in this area also. We're now going to take a look at the QQQ, which is the ETF that mirrors the Nasdaq 100. We're going to come over to here. We're going to hit this. We're going to pull this guy over to here, and let's zoom in closer here. What do we want to see happen here? We want this gap to get filled. Right now, it looks like the QQQ is bounced off of the 21-day moving average. If we were to actually buy the QQQ, what is the entry point we want to look at? We want to look at 480 and change. What you want to pay attention to when the market gaps up like this, you look at this volume. It's pretty decent volume, but if you look at Friday's volume, was more substantial than today's volume. So we're going to zoom out real quick because I want to show you something in the market. We're going to get rid of all of the noise here, and we are going to focus in. You have a little gap here. I'd like to see this get filled so we can come in at the entry point of 480.84. Now I'm a long-term investor, so these are buying opportunities. You're never going to buy at the complete bottom. Every now and then you're going to get lucky, but areas and zones are what you want to pay attention to. Let's take a look at some gaps in the indices. Let's take a look at this in the QQQ, this gap down here. Now it gapped here, and then now we have a gap here. Can it take off? It certainly can, but look what happens. It comes back down and it fills this gap. And when this gap happened, this gap here, well, it went up, it pulls back, it goes up, and it fills this gap. This gap has now been filled. So let's clean this up. The point is, it took several months for this gap to get filled. It took several months for this gap to get filled. I would really like to see this gap to get filled at this point, because if the market takes off, that's just telling me it's going to come back down and retest that at some point. I'd like to see a light volume pullback, and let's get in this thing at 480.84. Now, for long-term investors, these are buying opportunities. When the market pulls back and gives you a 10 to 14% correction, you're going to have 10% corrections on average annually, and then you're going to have a 20% correction about every 2 years. These are typically going to happen. It's not science, but it happens from time to time. And then you're going to have major downdrafts and crashes in the market every 5 to 8 years. Now, there's going to be a catalyst that's going to create these catastrophic events, and they're going to keep happening. When these downdrafts happen, these are great opportunity trading and also investing in your long-term portfolio. Keep in mind, the more analysis that you perform on an indice or a stock, it's going to increase your percentages of possibilities, which are going to increase your percentage of probabilities, which are going to increase your profitability. This is not science, but this is just going to help you with your percentage ratio. And the key to success in this industry is to manage your risk. Thank you. I hope this was helpful. God bless and happy investing. And for more analysis like this, appreciate it. Please subscribe.